Back in today's halftime overtime, the Gerstner guidelines with the Nasdaq down 27% in 2022 and pacing for its worst year since '08. There are questions about whether tech can work in the new year. According to Altimeter's Brad Gerstner, the tech playbook for investors requires a newfound focus on the bottom line.
I think that you can either fight the last battle, which will be pretty painful, right? Or orient and position your portfolio for 2023. I think the things that you want to own, to the extent you're going to be investing in technology, need to be those beaten up names with real free cash flow support. There are big cap names trading at historical lows.
All right, Hightower Stephanie Link is back with us. Hi, Steph. Good to see you again. No
Hi.
Distractions, no other voices. I see you added to Meta this morning, which really is interesting to me. It seems to speak exactly to what Gerstner, who is a big Meta shareholder, is talking about.
Yeah, I've been suffering with Meta, as you know, all year long. But I do agree with Brad. I think that free cash flow in general for any company, any industry is super, super important. And I think with Meta, and by the way, I did add to it, it's now my largest position in the portfolio. With Meta, I think people think the entire business has gone south, right? And it really hasn't. They have a legacy business and they have Meta. And we don't know what about Meta. And I know they're spending a ton of money on it, but they do have a strong legacy business. And they do have size and scale in terms of monthly active users, daily active users. They're making tremendous strides in Reels with $3 billion revenue run rate last quarter alone. So they are making some progress there. I think they can monetize WhatsApp, and he even alluded to it. And then you have this big cost-cutting story, right? So they're going to cut 13% of their heads this year. And so expenses are going to go from 22% year-over-year growth to 12% next year. That has really positive implications, I think, for margins. And their CapEx is also going to go from 9% this year in terms of growth to 6% next year. So there's a lot of things that they can do to try to stem the tide, if you will, on the legacy business. So I think at 11 times earnings, the stock is super cheap.
You know, I want your broader view, because I know that we have a lot of viewers throughout the last year or two, perhaps even a little bit more, who got into a lot of those, high growth, high flying, high valuation tech stocks that have gotten absolutely creamed because many of them are unprofitable. I thought it was really an eye-opening statement to hear Brad Gerstner, who lives in this world of technology investing, suggest we are in the midst of a sea change where it's about positive free cash flow. And the other kinds of stocks those stories are kind of done. They may never get back to the levels they were, and probably won't either from a price or valuation standpoint. Your view on that is what?
Yeah, no, I mean, positive free cash flow and also earnings and earners, right? And earnings growth. And so to me, that's what I focus on in general. It's very hard to value companies that don't have earnings. And when you start looking at price to sales and PEG ratios and this and that, it's very complicated. Momentum on the way up is phenomenal, right? But on the way down, there's no valuation support for companies that don't have earnings. So I think he is right. And I think that some of the names that he highlighted yesterday were interesting. Some are still too expensive for me, Scott. In fact, most of the FANG names are too expensive. Meta is the only one that I think is interesting. We talked about Alphabet, too. That one's on my radar. But again, I think you just got to be careful in terms of long duration assets. Because if you think, like I do, that rates are going to stay higher for longer, that's going to be hard for long duration assets, technology in specifics, as well as growth stocks.
I appreciate your patience so very much, Steph. When the bullet train is on the track, just get out of the way. That's the lesson for today.
I gotcha.
Have a great weekend. We'll see you soon.